Michael Saylor. Why I put $4 billion into Bitcoin, and you should too. Most CEOs protect their cash reserves like sacred treasures, but Michael Saylor did something that made Wall Street question his sanity. I'm sitting across from him in MicroStrategy's Washington, D.C. headquarters, and the number he just told me stops my breath cold. For $0.5 billion, he says, his voice steady as stone. That's how much we've invested in Bitcoin, and I'd do 10 times more if I could. The conviction in his eyes isn't recklessness. It's something far more dangerous. It's certainty born from seeing a truth that most people will spend their entire lives missing. Saylor leans back, his fingers interlaced, staring at a chart on the wall that tracks every civilization's failed attempt to maintain fiat currency. Do you know what happened that made me bet everything? He asks, not really expecting an answer. It's August 2020. MicroStrategy has $500 million sitting in cash, earning essentially nothing. The Federal Reserve has just announced they're printing money at a rate never seen in peacetime. $3 trillion in 3 months. Saylor runs the numbers late one night, alone in his office. The calculation is devastating. At current monetary expansion rates, his company's cash reserve will lose half its purchasing power in less than 5 years. Not from bad business decisions, from holding dollars. But what's truly striking is what Saylor discovered when he modeled every alternative. Bonds? Yielding near zero, guaranteed to lose against inflation. Real estate? Illiquid, management intensive, tax inefficient. Gold? Better, but archaic, impossible to move, verify, or divide efficiently. I spent 100 days studying every asset class in human history, he recalls, the memory still sharp. Every store of value, every monetary technology, every attempt to preserve wealth across time. And Bitcoin kept emerging as the only mathematically perfect solution. He shows me his research. Thousands of pages analyzing the properties of money. Scarcity, durability, divisibility, portability, verifiability. Bitcoin scores perfectly on every dimension. No other asset in history can make that claim. This is exactly where the picture changed for Saylor's entire understanding of wealth. I realize I've been asking the wrong question my whole life, he explains, standing up and walking to the window overlooking the Capitol building. I kept asking, how do I make more money? When I should have been asking, what is money? The distinction seems subtle, but the implications are revolutionary. Money isn't wealth. Money is a technology for storing and transferring wealth across time and space. And like any technology, it can become obsolete. The dollar, Saylor discovered, is a failing technology. Created in 1971 when Nixon severed its link to gold, the pure fiat dollar has lost 96% of its purchasing power in 53 years. That's not a bug. That's the design. Wait a second. Don't miss this critical insight that changed everything. Saylor pulls up a chart showing M2 money supply, the total dollars in circulation. In 1971, there were $600 billion dollars. Today, over $21 trillion. That's a 3,500% increase. Every time they print a dollar, they're not creating wealth. Saylor says, his intensity building. They're diluting every dollar in existence, including yours, including mine. It's invisible theft, and it's completely legal. He shows me the mathematics of monetary debasement. If the money supply grows 15% per year, and the economy only grows 3%, that 12% difference is pure inflation. Your savings lose 12% of their purchasing power annually. In 6 years, your $100,000 becomes worth $50,000 in real terms. The phone rings suddenly. Saylor glances at the screen, and his expression shifts. I need to take this, he says, stepping into an adjacent conference room. Through the glass, I watch him speaking rapidly, gesturing emphatically at charts only he can see. When he returns 2 minutes later, his face carries grim satisfaction. That was our CFO, he explains. We just executed another $150 million Bitcoin purchase. We buy every week. We never stop accumulating. Most companies hoard cash. Saylor treats cash like radioactive waste, converting it to Bitcoin as fast as legally possible. The reason is mathematical, not emotional. You haven't seen Michael Saylor's most powerful calculation yet. Let me show you why I put $4 billion into Bitcoin, he says, pulling up a presentation that has never been made public, and why every rational actor will eventually do the same. The first slide shows Bitcoin supply curve, absolutely fixed at 21 million coins. No government can print more. No central bank can inflate it. No corporation can dilute it. It's the first asset in human history with perfect, mathematical, provable scarcity. Now compare that to the dollar, Saylor continues, advancing to the next slide. The money supply chart goes vertical. No fixed limit. No constraints. Just infinite expansion at the whim of political decisions. But there was one detail that sealed Saylor's conviction completely. In March 2020, at the start of the pandemic, he watched the Federal Reserve's balance sheet explode from $4 trillion to $7 trillion in weeks. That's when I knew the game was over, he recalls, the moment still visceral. They weren't even pretending anymore. They were just printing. And once you cross that threshold, once you abandon all fiscal discipline, there's no going back. The currency dies. It's just a question of how fast. The historical precedent is overwhelming. Weimar Germany, Zimbabwe, Venezuela, Argentina, Turkey. Every government that prints without restraint eventually destroys its currency. No exceptions in 5,000 years of monetary history. Everything so far was preparation for Saylor's decision to go all in. In August 2020, he presents his board with the unthinkable proposal: convert MicroStrategy's entire treasury reserve into Bitcoin. The initial reaction is shock. Board members trained in traditional finance recoil at the volatility, the regulatory uncertainty, the reputational risk. I showed them two paths, Saylor recalls, pulling up the original board presentation. Path A, hold cash, guarantee we lose 50% of purchasing power in 5 years. Path B, buy Bitcoin, accept short-term volatility, preserve and potentially multiply our purchasing power long-term. He walks them through the mathematics, the historical analysis, the game theory. The vote is unanimous. MicroStrategy will become the first public company to adopt a Bitcoin standard. Hard to believe, but the first purchase happens within days. $250 million into Bitcoin, at an average price around $11,500 per coin. Wall Street erupts. Analysts downgrade the stock. Competitors predict bankruptcy. Financial media question Saylor's sanity. That week was the loneliest of my life, he admits, a rare moment of vulnerability crossing his face. I was betting my company, my reputation, everything I'd built over 30 years on my understanding of monetary physics. If I was wrong, I'd lose it all. But Saylor wasn't gambling. He was calculating, and the math was undeniable. Bitcoin's network effects were accelerating. Institutional adoption was beginning. The dollar's debasement was guaranteed. The only question was timing. This brings us to the core of why Saylor believes you should follow his strategy. Bitcoin is an investment, he states, his voice cutting through any ambiguity. It's a life raft. Every day you hold dollars, you're standing on a sinking ship. Bitcoin is the only vessel that doesn't sink with the dollar. He shows me adoption curves comparing Bitcoin to previous technological revolutions. The internet in the 1990s took 15 years to reach 1 billion users. Mobile phones took 12 years. Bitcoin is on track to reach 1 billion users in less than 15 years. Despite being the most technically complex technology most people have ever encountered. That adoption rate tells you everything, Saylor explains. Humans recognize superior technology when they see it. And Bitcoin is the most superior form of money ever created. But what's truly striking is how Saylor thinks about Bitcoin's ultimate value. People ask me, "What's your price target?" he says, a slight smile crossing his face. I don't have a price target. I have a purchasing power target. Bitcoin's value isn't measured in dollars. It's measured in what it can buy. He pulls up a chart showing Bitcoin's purchasing power against real assets over time, against real estate, against gold, against equities, against commodities. In every case, Bitcoin's purchasing power is increasing exponentially while the dollar collapses. In 2020, one Bitcoin bought about 30 ounces of gold, Saylor notes. Today it buys over 40 ounces. The trend is clear. Bitcoin is absorbing value from every inferior store value. The mathematics of this value absorption are staggering. Gold has a market cap around $15 trillion, built over 5,000 years as humanity's monetary metal. Real estate's monetary premium, the portion held purely as a store of value rather than for use, is estimated at $50 trillion. Art, collectibles, luxury goods held as wealth preservation, another several trillion. When people realize Bitcoin is superior to all of these, harder, more portable, more divisible, more verifiable, that value flows into Bitcoin. Saylor explains his conviction absolute. We're witnessing the largest wealth transfer in human history. From analog stores of value to digital, from inferior monetary technology to superior. You haven't seen the full scale of what this means for individual investors. Saylor leans forward, his intensity building. The reason I'm telling you to buy Bitcoin isn't because I want you to get rich, though you probably will, he says. It's because I don't want you to get poor. The dollar is dying. Your savings, your retirement, your children's future. It's all denominated in a currency that's losing 15 to 20% of its value every year. They call it 2% inflation, but that's a statistical lie. Real inflation, the cost of housing, healthcare, education, energy, it's running far higher. He shows me the Chapwood Index, an alternative inflation measure tracking the actual cost of living in major U.S. cities. The real rate is consistently 8% to 12% annually, 4 to 6 times the official number. This is exactly where Saylor's message becomes urgent. You don't need to buy $4 billion of Bitcoin like I did, he explains. You need to buy whatever amount represents your store of value, your savings, the money you don't plan to spend in the next 4 years. The strategy is simple but requires conviction. Dollar cost average into Bitcoin over time. Hold through volatility. Never sell back into the melting currency. I've never sold a single Satoshi, Saylor states. Not one, because selling Bitcoin for dollars is like trading gold for seashells. You're moving from a hardest asset to the softest currency. It makes no mathematical sense. Wait a second. Don't miss what happened during Bitcoin's biggest test. In 2022, Bitcoin falls from $69,000 to $16,000. A 77% drawdown. MicroStrategy's position, which peaked at over $5 billion in value, drops to around $2 billion. Critics declare victory. They say Saylor was reckless, that Bitcoin is dead, that MicroStrategy will go bankrupt. I didn't lose a second of sleep, Saylor recalls, his voice steady, because I wasn't measuring in dollars. I was measuring in Bitcoin, and we still owned every single coin we bought. The number of Bitcoin didn't change. Only the dollar price changed. And I knew the dollar was a problem, not Bitcoin. But there was one moment when the pressure became intense. Margin calls threatened. If Bitcoin fell below $10,000, MicroStrategy might be forced to liquidate some holdings. Financial media circled like vultures. Saylor's response was to buy more. We purchased another $100 million at $20,000, he explains, because I understood something the critics didn't. Short-term price is noise. Long-term value is signal. And Bitcoin's value proposition was only getting stronger as governments printed more, as inflation ravaged purchasing power, as the traditional system revealed its fragility. Within 18 months, Bitcoin recovered to $60,000. MicroStrategy's position doubled. The critics went silent. Everything so far points to one inescapable conclusion. Bitcoin is inevitable, Saylor states with mathematical certainty. Not because I believe it, not because I hope it, because the alternative is impossible. He walks me through the game theory. Governments worldwide are trapped in a debt spiral. They can't raise taxes enough to fund obligations. They can't cut spending without political suicide. Their only option is to print money and inflate away the debt. Every rational actor who understands this dynamic has only one logical response. Saylor explains. Convert depreciating currency into appreciating assets. And Bitcoin is the apex asset, the hardest money ever created. The adoption curve supports his thesis. In 2020, institutions own almost no Bitcoin. Today, BlackRock, Fidelity, and major financial institutions offer Bitcoin products. El Salvador made it legal tender. Pension funds are beginning allocations. We're still in the first inning, Saylor insists. When nation-states start competing to accumulate Bitcoin, when central banks add it to reserves, when the CBDC nightmare drives people to seek financial sovereignty, the demand will be exponential. The supply is fixed at 21 million. Approximately 4 million are permanently lost. Another 10 million are held by entities that will never sell. That leaves maybe 7 million available for 8 billion people. You haven't seen Michael Saylor's final argument for why you should buy Bitcoin now. The window is closing, he warns, his voice taking on urgent intensity. Every day, more institutions figure it out. Every week, more capital flows in. Every month, Bitcoin becomes less accessible to ordinary people. He shows me the progression. In 2020, his average purchase price was $11,000. Today, Bitcoin trades above $50,000. Early adopters captured 400% gains. Late adopters will capture far less. I'm not saying this to create FOMO, Saylor clarifies. I'm saying it because it's mathematically true. Scarcity plus increasing demand equals higher prices. That's not speculation. That's economics. The phone rings again. This time, Saylor answers immediately, his expression sharpening. Execute it, he says simply, then disconnects. Another $200 million purchase, he explains without emotion. We buy constantly, because every dollar we hold is a dollar losing purchasing power. Every Bitcoin we buy is purchasing power preserved and multiplied. The strategy is relentless, systematic, unemotional. MicroStrategy has become a Bitcoin accumulation machine, using every financial tool available. Cash flow, debt offerings, stock sales, all converted into Bitcoin as fast as possible. Everyone thought they understood Michael Saylor's Bitcoin conviction, but the real story is far simpler and more profound than speculation. It's about understanding that money is technology, that the dollar is obsolete technology, and that Bitcoin is the upgrade humanity desperately needs. I put $4 billion into Bitcoin because I understand what's coming, Saylor says, his voice carrying absolute certainty. The death of fiat currency, the rise of digital scarcity, the greatest wealth transfer in history, and I'm positioned on the right side. The choice, as he presents it, is stark. Preserve your wealth in the hardest asset ever created, or watch your dollars evaporate in the furnace of infinite money printing. The mathematics are simple. The decision is yours. But the clock is ticking and the window is closing.